Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. It is Monday, a new week, and I guess the week really started yesterday on July 5th, right? July 4th was the holiday. It was good that the futures were closed so you could actually watch the fireworks and not tweet about the market, not tweet about Greece, and enjoy your friends and family, because at 6 o'clock on Sunday, the S&Ps were down, 27, 28 handles, and everyone's freaking out that everything's going to crash and that we're going to have Black Monday, the whole 9 yards. So that's why we pretty much say, once you have the positions that you're going to have, for the weekend, try not to overlook, oversee, just get yourself nuts looking at the futures, because a lot changes. And by this morning, futures are only down 13 to 14, which took away, a decent size of the actual morning rally, which is what's been happening. Feels like, maybe we should all become vampires and not be up during the day and just trade the overnight futures markets, because the moves are a lot more dramatic than intraday. But I'm kidding. You can't do that at this point. Well, you could, but if you're going to do both, I'm up at 4:45 each day. That means I sleep maybe for 3 hours, and longevity is not part of that plan. So I'll stick to what I do, and hopefully be able to manage the positions and make money trading the markets. But anyway, futures down 14, 15 handles. We went green. You had a little midday sell-off, and then at the end of the day, we basically closed off small. So what does that mean? Does that mean the market's giving us a false sense of security, is a trap, so it could just break the 200-day? Or does that mean that markets somewhat took it in stride for now, and some sectors are above the 200-day, and some are a little bit stronger above the 50-day, and you have to still be very selective, where you pick and choose your spots and figure out what's next. Let's just go right to the S&P. The SPX basically spent another day holding above the 200-day moving average. This morning it held above this level, and not much you could say right here. The bears would point to this, the head and shoulders pattern with the left shoulder, the head, the right shoulder. Basically the bulls had their chance right there when it broke this descending channel, then lost their chance right there. So the bears will say, you know what, guys, we had this head and shoulders pattern, which, this could have been the neckline. You came into the 200-day. You usually bounce the first time at the 200-day, but what did we do? We retested that neckline and haven't found much traction. So if you go a little bit further back to look at here, what you have. So I guess the longer it stays below this 2085, the higher the chances the vulnerability happens, where this is just say 2080, okay, because it's not perfect. From 2030, that's 50 handles. So 50 from here would take you a little bit further, which would give you a breach of this, okay, into there, and then you have much bigger support down here. So at this point, you don't really know. Okay, it could happen that way, it might not. So we'll see. You don't need to be all in either way. Some people are probably going out short, some are going out long. For me, I talked about on Thursday that I want to be in key stocks that are showing relative strength, not indices, just in case we get a big gap down like we did on Tuesday, because today, because those stocks have the luxury of perhaps going green even if the market doesn't. So you could trade out of it, or you could even add to it, make cash flow. Or if you don't take it, or take it in your swing account, not in your active account, you could, hold through in the swing, and let it go green and go, and buy it in the hole in the active and make money in both places with the right stocks. So anyway, what are some of those right stocks? Facebook, started out down 80 cents, went green. It's continuing to hold this upper flag. It's holding the 8-day, which not a lot of stocks are, flagging very well. Okay, was it vulnerable to break and go to the 21-day and still be okay? Yes. Did it happen? No. Okay, you look at the 5-minute real quickly. It opened up lower, so didn't even give you much pain. Okay, this is where it opened up this morning, right here. Gave you a quick gap fill, showing you that it was in the game. Made a higher low, and then it cleared this little pivot before, topping out. And then mid-afternoon, as it was pretty much flagging, so if you thought perhaps maybe the market was going to hold in there and continue higher, this is where your stop is. This is where I had to stop on some of my shares also. Then it broke, okay, and then what did it do? It came in, held higher, a higher low. I sent around 2 o'clock, 2:30, I sent a tweet saying, I got stopped out of some of my longs right around 115, which was right here. Now we're creating perhaps a higher low, and let's see if we you know, what happens here? So what did it do? It took you right back to that breakdown point, pretty much the spot of max pain. So if you got stopped out here and you didn't cover your shorts there, you're not sure what to do here, which is what the market continues to have people doing, guessing. So either way, you know, that's a very strong stock. Tesla, believe it or not, very strong stock. You know, we talked about it breaking the descending channel back here, you know, and then reclaiming the 200-day there, and then it's been trending ever since. Today we said, can it hold that 273? Not only did it hold it, it took a little time, but it went positive, and who knows, maybe it's flagging again. Sometimes it's hard to trust, you know, these high beta names with high valuations, but only stock I see above the 8-day, let alone the 21-day, etc. So, and you're a stone throw away from the prior high here. So, you know, Citron came out with a negative report. If it was that weak and there was no buyers, it would have fallen apart already. So, not saying chase Tesla up here, but it's acting strong. I was also long MBLY overnight. Wow, did that go, you know, it went green fast. Look at, again, just like Tesla, almost this descending channel. This is when it didn't act well last year, started acting better. Then you had this first channel. I put this on Twitter saying either throw it in the drawer or you could trade it and learn how to trade it. And here you had a nice move, and all of a sudden, you know, you go closer up, and even with today's volatility, you know, it held, first of all, it didn't even get to the 21-day, held the 8-day, and broke a little bit above this high here. I'm hoping that there's no secondary or something out there. That was probably something that could screw up the momentum, but, you know, at this point, heading right back to highs, and I think that this is a disruptive technology, you know, something of the future. If you want to check out Barron's CNBC segment, Google it, you know, and he's usually an early adopter, and this chart looks unbelievable to me. You know, if they just have this earnings come out and it's decent or shows growth, which they could, this high right here should not be a problem. But then, you know, you look down the spectrum, and there's not a lot of stocks that are above the 8 and 21 days. So what do? You look for some names that, or groups that might be above the 50-day, especially when the S&P is testing around the 200-day. So just saying in the banks, you know, we were talking about Goldman today. Ken Goldman, I listed it in my note. I said, you know what, you know, see if it holds the 50-day. So for now, Goldman held the 50-day. So if you targeted that 50-day from my Redler All Access note, you know, maybe you bought some, and we'll see if it could rally a little bit more tomorrow. This is when it broke the 8 and 21-day. So if you sell it when it breaks the 8-day or the 21-day, you have the luxury of testing lower and held the 50-day for now. JP Morgan also, you know, held the 50-day for now. That actually, I didn't buy Goldman, I bought some JP Morgan. We'll see how that goes. You know, this too kind of broke this trend here, and now it's trying to stabilize. We shall see if it rebuilds or what the story is, but all in all, this was green with a, you know, in a market that have had a sea of red. As far as you know, other things going on, like in high beta, there's really not much to hang your hat on. Apple was downgraded, but it didn't really fall apart. Perhaps, you know, it's still, this is major support, which it's not at. It held last week's low, which I guess is a short-term positive. At some point, if this were to take this out to the upside, maybe it acts a little bit better. Still in this big-time channel where you don't have to do much, but if you bought it down open today, you made a little bit of money. And that's what guys are doing now. They're trying to make a little bit of money. No one's trying to be a hero right now. And at this point, we'll see if I could reclaim this and act better. Right now, it's still just in the range, and I know a lot of guys tried to press the downgrade today, and we're probably just as frustrated as those who tried to press this to the long side. So I guess the moral of the story is don't press this. Just trade it here and there, very small. Amazon, what did it do? Not much, still in this range. It was stronger earlier, and then it got weaker, and it's still, you know, not doing much here. You know, tried to break a little bit above this, but didn't really have much, you know, much conviction there. Still in this overall channel though, and looks okay. Same, I guess the same goes for Netflix. Still in this overall channel. Some guys were asking if they should go home short it because of this candle right there, and I don't know. It's still, you know, decent job absorbing the, you know, icon saying he sold it, and just technically, if you didn't know what today meant, this was your shot across the bow. It's still above the 21-day. Reclaimed the 8-day. It's well above the 50-day. So it's still showing market leadership and market strength in the turbulent times. So I wouldn't just be blindly short this, but pick your spots long. Maybe if we're stronger tomorrow, there's a trade above this, you know, what is that, 666-ish? Ooh, that's an ugly number. But anyway, that's what that is. Google, I don't think anything really happened here. Nothing. Rejected by the moving averages. And then, you had some, being down sectors that could give you, give you some one-off plays. I know some guys were looking at the airlines. With oil down 8%, the airlines, which has been broken, did close strong. This was that last piece of news right there when they talked about, I guess, collusion or whatever. Didn't make a new low, and now it's still hanging around there. We'll see if it breaks this, and then the 200 days right there. This, whole stock/sector was broken right here. Look at this. You have a wedge-type pattern on top of a head and shoulders top pattern that broke to the downside. Then you had, remember this? Remember when oil was going down and it couldn't go up, and then it reversed here on that outside day? Boom. So I guess the airlines for today look decent. What did the transports do that have been broken? Not much. Still below the 200-day. It's just, non-event. What did the XLEs do today? Some guys are trying to show the relative strength as oil is really weak. It's still, it just goes to show you for trends. As an active trader, for me, I try and be involved or in a portfolio approach when you're above the 8 and the 21-day moving average. That's the trend that this had here. This was a nice breakout here. Another nice breakout here. This was your first sell pattern. Okay. Came in, if you said, oh, I'm just going to stick with it, you had a lower high here. Then some would point to this as being a head and shoulders top, which is a distribution pattern. So once it broke here, that could have been your out. Then we talk about the importance of the 200-day. Does it break below it and then quickly reclaim it and go higher and be like a sell pattern or a sell trap? Or does it stay below it, can't find the friend, institutions sell it, and basically it's that weak? And that's what happened here in the XLE. So that's what I'm trying to figure out in the SPX even, because everyone's like, is this time different? Are we going to get our first bigger correction? At this point, the jury's kind of out, except for we are still above it. But then you look at something like the diamonds, it's coming very close to it better do something soon, otherwise, actually, what are we on day 4-ish, first green bar? I don't know. It looks like there's no conviction selling, but there's not much conviction buying here either. It could have been worse as far as downside. Could have triggered a sell pattern, and people could have got scared and could have went all the way down. It didn't. So maybe that's a sign that we're holding in there. Overall, still, caught in this monotonous range where I think it's flattish for the year, maybe down a little bit. But that's what happens when you're in year 6 of a bull run. Look at what this market has done since 2009, all the way here. So boom, all the way up. So if you think that it's been a crazy corrective phase, look where we are in the Dow. That's why people are so scared to hold the bag. And anyone who's shorted each time here or here or here, they've probably been blown out of the water, so nobody wants to do it again here. That's what creates this low volume type of choppy range-bound trade that we're in. But ultimately, we shall see. I'm going to be on CNBC Asia tonight. If you guys watch CNBC Asia, I'll be co-hosting from 7:10 to I think 8 o'clock tonight, talking about why is the trade so lethargic? Why is there's such low volume, and why are people frustrated? Because again, year 6 of a big bull run, where no one wants to pay the top. Every time we get a 4.5% correction in the last 2 years, people say this is the time we're going to crash or correct 10, 12%. If you shorted there, you got hurt. If you reduced your risk, you had to pay up higher. So you're in this conundrum type of atmosphere where there's not a hell of a lot to do until something gives. And if nothing gives, we're going to have a lot of the same. I look across the landscape in the charts, and they're more neutral to negative to me than neutral to positive. But try shorting the open today. You didn't do so well. Maybe the H cell setup you did fine, but still, who knows? At this point, still, we're holding in decent. You go look at some charts here also. So look at the IBBs. Look at the enormous run that this has had. And then now you go short term. What's it doing? You go to the daily. Still hangs in pretty well. Okay, let's see how we've been showing it like this. Talk about sectors holding higher. This kind of reclaimed the 8 and 21-day above the 50-day, which had retested last week, above the 100-day, the 150. Look where the 200-day is. That's where the 200-day is. So if any sector is showing relative strength, okay, holding higher, it's the bios for now. The Russell, little wishy-washy, but still above the 200-day, above this. It did lose momentum when it traded below this prior pivot and lost momentum when it broke this ascending channel the same way it lost momentum when it broke this one, but it regrouped and made a new high. We'll see what happens here for regroups. Right now it's still a lot of resistance in front of it, some small trades here and there, and that's that. Oil, I said take a look at it this morning, see if there's some kind of signal to buy, and there really wasn't. I didn't touch it today. The USO, like I was saying, at least it played by the rules, right? You had this like wedge type pattern here where it broke below. So if you happen to have got out, smart. If you happen to got short as it hovered and stayed below it, you got your follow through. Do you stay home short tonight? I don't know. We'll see. But you got paid today if you were short as this little channel here resolved to the downside. And you look at it a little bit like this, and it's still just a lower channel choppy mess with not a heck of a lot to do. So at this point, you still have room back to the lows, but does it have to get there? No. But at least there was something like that there for some of you traders. It's below the 200-day, so still not institutional quality even as far as oil. FXI, I did take this home long. Closed actually below the 200-day, which actually, I don't know why it is. I guess they might have the wrong 200-day here. But this was the spot that I was looking at. I was looking for it to come back and retest that. If you sold it, here on that gap down, or you sold it on the lower high here, or even there, it's a spot to try. If this market's any good whatsoever, it should hold in here. Okay, it's come down a lot. I think the Shanghai is almost 25 to 30% off the highs. Could be worthy of a trade, maybe even a tier one. They're trying to throw everything at the kitchen sink. It's, at it to keep it afloat. It's definitely oversold. We'll see. The more calculated trade I had going on here, or my thesis was, to accumulate this in the channel here. Okay, and that was there. Okay, we talked about how I'm not sure when it's going to go, but it's been since 2009 after it showed the relative strength and he pretty much took the markets out of the bottom, hasn't done anything. So, accumulate 2013-14 for a breakout move, and basically that's what happened, and now it's coming back in to retest it. Shouldn't have came in this fast, but at this point it's worth a look. We'll see what happens with the Chinese markets tomorrow. I would just keep it, keep it small. And if you were accumulating it and you sold the strength like we talked about in the note above 50, then you have the luxury of trading around it and buying some back in here and figuring it out. And that's really it. I feel like if I had a lot of conviction, I would tell you. At this point, I really don't. Some sectors are bent and broken. Some are, neutral. Some are neutral to negative. Some are neutral to positive. And I think everyone in the world is trying to figure it out. And if anyone says they have the answers, you know what? Don't believe them, because I don't think anyone does. And if you do, okay, call me. For me, my thesis usually is I'm in a portfolio approach. If we're above the 8 and 21-day moving average, that means we're in a momentum trend. That means we're strong. That means, pullbacks are being bought and you have some breakouts. We don't have that right now. We're actually testing more macro trends where, most sectors are below the 8 and 21 days, some below the 50, and some are below the 200 for a while, but that happened last year, like oil and the XLE and the transports. But then you have some that still are hanging around. So that's what I've been focusing on, the bios, the small caps. The S&P is still above the 200 days. Some stocks still act well, but there's not enough of them where the leadership is narrowing, so it just has me on my toes. Tonight I think I went long, still long, long Facebook, MBLY that act best. Banks, that held the 50-day. I took JP Morgan versus Goldman, and I took a little FXI. Just, some positions, considering that we held in pretty well, via the news and what could have happened from Sunday night. Is it a false sense of security trap, and are we going to be down 20 handles tomorrow? Maybe. If not, and we trade the way we kind of should, maybe we get a bit of follow through to the long side tomorrow, and then we figure it out. But also, at least if we open lower, I took some names that have been acting stronger that were the first to go green, and at least that gives you the benefit of the doubt to even in a down tape to salvage it, versus taking the S&P or taking the Dow or taking the indices that, if you get a trend down day, you hardly get a way out. And that's it. It's Monday. Got a long week ahead of us. Hopefully you navigated it correctly. I feel like a lot of people went, low risk anyway, either long and short into the weekend. That's the way most prudent traders do do it. A lot of signals were saying to be neutral. And then today there were some opportunities. At least, we didn't have a big gap down where you were trapped if you were in longs and didn't get a way out. I think most stocks did give you a way out. And if you also wanted to short a bounce, you had the opportunity where we went from green back down 110, and then once you saw us hold higher around 2 o'clock, you could have made money both ways. Not a heck of a lot of money. These ranges aren't huge. We're not in China. We're not in actually Europe. We're trading what we have in front of us, and that's what we have to trade the market we have, not the one we want. And right now we're still a little bit vulnerable, but hanging in there. Have a good night.